I personally believe that if you build value and that value is sustainable, eventually you will find the exit for it. Even if we touch on currency, you take a 50% hit on currency in 1 year. If you're growing 2 to 3 times per year over 5 to 7 years, nobody wants to lose 50%, but still, it doesn't kill your story. This is a great time to build a business. It's a great time to build it. If you have the capital, and if you see the opportunity and you have the team and the capital, this is a great time to do it, because it's similar to Fowry, Visita, etc. back in 2011, in that there isn't a lot of competition. I think Fowry proved an important assumption that we had, which is you can build a large enough company that's Egypt only. You know, one big thing I've learned from this job, being in this job for some time, is the initial plan almost never materializes.
Welcome to the Lucidity Insights podcast, The Perfect Pitch. I'm super excited today to have sitting across from me, Tarek Assad from Algebra Ventures, which is a Cairo-based venture capital fund that mostly focuses on early stage startups. But we'll get right into that. Tarek, it's really lovely to have you here.
It's great to be here, Erica. I'm excited to do the podcast with you. We've talked a few times before, but it's great to meet you in person and do the podcast in person.
And to have a Stanford alum as well, although we were just talking about the GSB, and there's a few years between when you went and when I went.
Negligible.
Negligible years. So that's always
so I
great.
like to think.
So first, as we always do, I wanted to get to know the investor sitting here, and I think everybody else who's listening and watching would like to know a little bit about you as well. Just so you know, our audience is mostly founders, but we actually also have a lot of students and also entrepreneurs that have expressed interest in potentially pivoting to be sitting on the other side of the table at some point. So how did you end up in venture capital?
I mean, when I graduated from college, or certainly when I was a student, I would never in my wildest dreams have imagined I'd be a VC. I didn't even know what a VC was. But, you know, I can give you some background.
Yeah.
So
We'll start from there, because from way back when I'm sorry for the way back, but for both of us,
it is way back.
You graduated in electrical engineering.
Yeah.
In university, Al Shams in
So I went
Cairo?
to one of the public universities in Egypt, studied engineering, Ain Shams University.
Okay.
Where you study nothing but, you know, math, physics, etc. for 5 years. So I became really good at that and completely unaware or incapable of doing all the other stuff.
And what were your ambitions then?
Just to be a really good engineer.
A good engineer.
Yeah,
so you pictured yourself working at?
So I graduated from engineering school. I worked in Lucent Technologies.
Yeah.
Back then, designing fiber optic networks. So for me, this was an amazing job.
Interesting.
But it was around the time where the internet was starting out. Of course, in the US, in Egypt, there was nothing happening. And by total random chance, I found myself working for a tech startup in the Bay Area, like a year after college. I met the CEO at a party. We chatted a little bit. I told him a bit about my background. Back then, there was a huge influx of engineering talent coming into the Bay Area from all over the world. The work visa H-1B took 2 weeks.
No way.
Back then.
For those who don't know, that's impossible these days.
I think it takes 6 months or more. Now.
Months if you get accepted.
Yeah. No, it was a very smooth process, took 2 weeks. But yeah, you know, I think the most important things in life happen when you least expect them. That's absolutely been my experience.
I love that. So what was this startup that you ended up working for? What were you working on for them?
So back then we were doing a type of search technology. This is very early days for the, like very early web applications. Like it was right after the Netscape IPO. So,
okay. You can date yourself.
Yeah. Ancient times. But, I learned a lot. I worked there for a little bit under 4 years. But I saw that I was very much on the technology side of things, which I really enjoyed. But then I realized there's a lot more to starting companies and building products than just the engineering part of it, because there's all the commercial stuff, but also, the financial aspect of it, and these aliens called VCs that would come to the company and meet with the board. And I was very intrigued, but I was very distant from that. So that's why I applied to the GSB, and that was really also a great experience and a turning point in my career, to move from a very technical career, which I enjoyed, as I'm a geek, so I loved it. But also I think evolving from that background into more commercial role was also was a good move.
So you went to the GSB for 2 years, equipped yourself with all these management tools, and then what?
And then had aha moment of like, what do I want to do with my life? Do I want to stay in? So I actually started the company with a classmate from the GSB right after business school. But then I was thinking, I've been in the US for a little bit over 6 years. Do I want to stay here and it's, beautiful life in the Bay Area, or do I want to go back to Egypt? And I did some soul searching and decided that I wanted to come back to Egypt. So I literally packed up and went back to Egypt. I did a couple of operational, I did some consulting, and then I did a turnaround and started Inventure in almost a little bit less than 15 years ago.
Wow.
In Egypt. Back then, there really was nothing. There was the one fund that was government sponsored, so not a sovereign fund, but a fund where almost the entire LP base is government controlled. So Telecom Egypt and the Technology Development Fund.
Okay.
And Idea Developers is the GP.
GP part of it. Okay.
But the fund is the Technology Development Fund, and it was I think a unique move from the Egyptian government. I mean,
it was one of the first of its kind, right? Was it
the first one was 2004.
Okay.
Which was a smaller fund. I wasn't involved with that at all. The second one, they raised it in 2008, and I joined in 2009. So I was very lucky to join a fund that was already raised, and there were already a few investments in there.
We were just talking about that. How you absolutely dislike fundraising.
It's not fun for anyone, unfortunately.
Yeah,
yes.
It's interesting because that must give you a lot of empathy for startups sitting across the table that are really trying to fundraise.
For sure. I mean, it takes a long time. It takes a lot longer to raise a fund than it does to raise equity for a startup. Doesn't mean it's not painful for the founders. So yes, for sure.
And so the fund was called
the Technology
Development Fund. You were the managing partner of that?
Yes, I joined in 2009. In early 2010, Ziad Mukhtar joined me, and then together we worked on building the portfolio. We had a couple of very good success stories. Fowry was definitely the greatest success story there.
One of the technically the first $1 billion valuation. I don't know if we can call it a unicorn, but
it's not a unicorn today. But I think
post-IPO.
Unicorn or not, I think Fowry proved an important assumption that we had, which is you can build a large enough company that's Egypt only.
Yes.
Without having to expand somewhere else. So
absolutely.
That was something we had theory for, but Fowry really proved that.
And in the region, Egypt's quite unique for that. Saudi is one now that's showing that it also has that strength and that customer base within its country. But most other GCC markets or a lot of MENA markets are not quite large enough for unicorns to be born just being a domestic company.
Correct, and of course the profile of the population in Egypt is different from Saudi and UAE. Yeah. So the types of solutions that get built, particularly the ones that focus on the long tail of either consumers or SMEs, which is something we're very focused on in Algebra, and many Egyptian startups, work to serve these customers. that's different from what you find in other MENA markets.
And so here you are, you've got, I would say, it sounds like you had about a decade of sort of more operating experience, and then you were going on to the investor side. And now you've been around long enough investing. Do you feel those first decade or so of really, really technical and, startup experience has really colored the way that you invest in startups?
Yes, for sure. I mean, honestly, I think every market is very different from, has its own particularities. And so having been in Egypt for a while before being an investor, that also definitely helped. But the technical background and the technical background is useful for sure, even though, technology evolves, of course. But also, I think one thing I picked up in the Bay Area that I felt really stayed with me is the inspiration aspect of successful startups. So, when I was a young engineer, the office right next door was, I had a few friends, and then suddenly all the Toyota Corollas and Nissans in the parking lot became Porsches and BMWs and so on because they got acquired by Microsoft.
Okay.
And I, as a 23, 24-year-old Egyptian engineer, I said, I can be like these guys. They're not,
any different.
No, they're not any different, and I can do exactly what they're doing, and I can achieve, financial success and moral success and so on. So I think that's a really strong virtuous cycle where you can get, for someone who's young, who has ambition, to find a role model or a success story that you can relate to. I think that comes with all kinds of positive factors for a country, especially like Egypt.
Yeah, and especially across the region, I think that is important, that we're constantly, I think a lot of us are talking about when we can stop calling it a nascent market, right? Yeah. And that we're finally getting to the point where we do have second-time, third-time founders, and that they're really building legacies and startups that of successes and inspiration for the next generation. Take me back with this. If you had all this inspiration and you saw this happening in the US, take me back to the decision of moving back to Egypt. What were some of the drivers back then that made you go, yeah?
There were two aspects to it. There was a personal aspect, wanting to be close to family and childhood friends and so forth. But actually the larger component of it was professional. I felt there's a lot of opportunity in Egypt. There's a lot of things that haven't been done yet, a lot of inefficiency, and with that comes tremendous opportunity. And I felt like in the US, I was very grateful for the experiences that I had, but still, it's much more established. There's a lot more. There's a lot of incremental value creation, whereas in Egypt, it's just in many instances a completely blank state, and you can come in and really change things and see the needle move very significantly.
And when you came back, I think that was around 2008-09.
It was actually a bit earlier than that.
Earlier. Did you immediately want to go into investing first?
No, I did a turnaround of a services business. So I got a few years of operational experience.
Okay.
And then again, by random chance, through a connection from a friend from the GSB, I got this job doing at TDF.
Yeah.
And I was completely clueless, to be honest, when I started.
And did you get hooked?
I've been doing it for 15 years.
Yes. So tough transition, easy transition, what would you say?
I lacked the apprenticeship, which meant, I was a lot more in sort of, me and Ziad were a lot more in startup mode, trying to get things done, learning on the job. Mm-hmm. So there were some bumps along the way, particularly in the beginning. But honestly, back then there was so little that had we had this experience in another market, I think it would have been hard to, it would not have been easy to take that and move it into Egypt, because Egypt had nothing back then.
Right. And yet you did come at an interesting time, because when you were at the fund, as you mentioned, you guys funded Fowry. But also, one of the reasons why I love speaking to investors like you, Tarek, is that you've been around the block long enough to see a few down cycles.
Yeah.
And the one that comes to mind is the Arab Spring, 2011, 2012, I mean, Egypt has been through a lot in the last...
It has been through a lot, that's true.
the last 15 years. Take me back to that time. And I know you have some thoughts on, you know, obviously Egypt's going through a bit of a tough time now as well, last year in particular. You have some thoughts and some really interesting perspectives on especially those founders and investors who haven't seen a downturn like the Arab Spring back in 2011. Can you make some parallels and speak into that?
I can try. It's never exactly the same thing, but I think there are lessons learned and there are things that carry forward carry over from one cycle to the next. In 2011, just the level of turbulence was off the charts. So, I mean, not just economic issues, but there was no president, no constitution. The revolution had just happened. Of course, economically, it was a disaster. But at some point, there was no police on the street. So capital controls, you know, you name it. People leaving Egypt because they were afraid for their own safety. So the level of turbulence and the level of uncertainty was definitely higher than what we've seen even in the past couple of years. But with that, companies like Fawry, like Visita, came out and were able to raise capital and were in a very unique position of having a strong team, having the capital, going after an opportunity without a lot of competition. And it's without a lot of competition on the market side, because not very many other companies are as capitalized and have the resources to go after these markets, but also on the talent side. Because, you know, you're not competing with every other startup and the large multinationals and so on, because everybody scales back in these times of turbulence. So definitely saw that happening in 2011. Saw it again in 2016. So we raised our first fund at Algebra in October 2016. In November of 2016, the pound went from 8 pounds to the dollar to 16 pounds to the dollar. And then in 2022, we raised fund 2. And then, so yesterday I was meeting with someone who said, please don't raise fund 3.
Yeah, exactly.
The national interest of Egypt.
So basically, you're the reason for currency devaluation.
Correlation, not causality, I hope.
We'll come back to Algebra, but yeah, looking back on Fawry, do you have some lessons learned there of how they navigated? Because they really grew during this time, during this very turbulent time back in the Arab Spring.
You know, one big thing I've learned from this job, being in this job for some time, is the initial plan almost never materializes. So when Fawry started, it didn't have kiosks. It was just banking through bank solution with ATM machines. When Visita started, it didn't have reservations. It was an EMR solution. So I think strong founding teams and generally, strong startups are able to navigate.
That's fascinating.
Things change, the environment changes. But I think one of the unique things in our markets is that there are so many areas of opportunity. So you start out doing one thing and you go for it, and then the environment changes, devaluation, something happens. A lot of it is macro related, but sometimes also market environment or regulation changes. But because we're still operating in an area where there's an opportunity everywhere, you navigate and you find your way, and then you keep going, and they might end up in a different direction, but the upside along different paths is still very significant.
Okay. And then, so let's jump forward to now, Algebra Ventures. Well, 2016. You're almost 10 years old. I mean, 8 years old. So it's a decent fund for Egypt. One of the OGs, I think we can call you. I want to know, why did you start it? What was your initial investment thesis? And has that changed? And then we'll have all of this stuff available in the show notes and links to your investor profile on lucidityinsights.com. But maybe just talk a little bit about what you're looking for, what you're investing in, and we'll dive a little bit deeper into that as well.
Back then we'd met investors who were interested in funding an independent VC fund. So we set up Algebra.
And talk a little bit about that move from, a government-related fund to private.
It took us some time to find the right formula. Talking to the old investors and the new investors, because we certainly did not want to disappoint the fund that we had been, or the portfolio companies and the investors that we've been working with for several years. But also saw a pretty big opportunity in setting up Algebra. So it took some time to find the right formula. But we ended up starting Algebra and raising capital from IFC, EBRD, Cisco, Egyptian American Enterprise Fund, and other investors. So we had these large marquee investors who were supporting us, and it was great. It took a time, of course, to do it. And I remember, in the investment committee of one of the large investors, the risk officer said, "You can't put Egypt and venture capital in the same sentence." We've never seen this before. So
really,
2016 was a different time.
Yeah, it feels like just yesterday, but you're right.
But I think the teams we worked with really went to bat for us. They supported us when we had very little. And I'm very grateful for that. We were able to close Fund 1. We ended up with a $54 million fund. We made 21 investments from that fund, including, we started early, so we have phenomenal companies. I won't name any, but we've got some very solid companies in that.
In case your children start bickering.
Exactly.
Yeah. Over who's the favorite child.
Exactly.
Okay. And then you raised your second
And then
fund.
we raised our second fund in almost exactly 2 years ago.
Okay.
Same investors as well as new investors, also a mix of DFIs and private capital. And we're very proud to have seen that the investors from Fund 1, almost all, with one exception, came back to Fund 2 with almost a 50% increase. So that gave us a very good vote of confidence that we're doing something right. These investors have portfolio of funds all over the world. Some DFIs have a mandate to invest in Egypt, but many of the others are doing it because they think we have good potential. That was a great vote of confidence.
Yeah.
We raised $100 million in 2022, and we have been very active since then. Even with all the turbulence in Egypt, we made 10 investments in US dollars in Egypt in startups. We'll probably do 2 more, and we'll close 2 more in the next month.
Okay.
So
we've been
very active.
So first fund, $54 million. It's already fully deployed.
Almost fully deployed. There's very little left to support.
Okay. And in 2022, you raised a $100 million fund. So the first fund was Egypt plus MENA, and the second fund is Egypt plus Sub-Saharan Africa.
North and Sub-Saharan Africa.
North and Sub-Saharan Africa.
So one of the learnings from Fund 1 is that we made investments we made 2 investments in Jordan and 1 in UAE. But we were finding that many of our best entrepreneurs are looking more at African markets. Because long term, the structural similarities are more compelling. So if you design a solution that works well in Cairo, it will not necessarily work well in Dubai. It will at sometimes, but not all the time, especially if you're going after the long tail. But it makes more sense for you to think about Nigeria, Kenya, Morocco, etc. as expansion markets. And we also saw that founders and investors from these markets have an interest in Egypt. And we believe that bridge between North Africa and Sub-Saharan Africa will happen. We'd like to have a role in accelerating it a little bit. But that's the thesis for Fund 2, is that we want to build these bridges. We want to help companies grow from one side to the next, both ways. And we want to build relationships with co-investors.
And are you seeing Egyptian startup founders thinking in this way immediately? Because we've had a few conversations about this already, that in the past, generally, the historical narrative is that Egyptian companies see the dollar signs in the GCC and go, we need to go there. We've got the tech. We can roll it out and we can sell it for 4x what an Egyptian would pay for it, or a Nigerian would pay for it, for that matter. And then now there does seem to be this big conversation about, hey, Egypt is a top 3 African tech ecosystem. Why isn't there more activity where there's a Pan-Africa fund out of Egypt, or Egyptian investors actually supporting Egyptian startups expanding into the rest of Africa? And there does seem to be some sentiment that Egyptian founders actually aren't thinking about the rest of Africa because of this old narrative. What's your take on that now in 2024?
I have several thoughts on that.
Yeah.
I think the very first wave of Egyptian entrepreneurs that started before this ecosystem was there was actually enterprise applications. So you had people who developed, say a hospital management system. They sold it in Egypt and it did well, and it was easy to take that solution and sell it, they see the dollar signs and sell it in GCC markets for a higher price. So it made a lot of sense. And then as things evolved and consumer solutions started to become more prevalent, that didn't make sense, wasn't as easy and didn't make as much sense. Not to say that it will not work, but will not work every single time. I think founders with a longer term view are more interested in African markets, and that could be, Morocco or Kenya. But founders with a shorter term, like if you're trying to solve a shorter term crunch, in many instances, it makes a lot more sense to go to the GCC. There are a lot of parallels there. It works well for a certain set of companies. And then I think the Africa play, since it doesn't entail cash, there are no dollar signs. So it's a longer term play. But I think it speaks to fundamentals that can be more nice. It doesn't have to be. Again, there are many companies in our portfolio that are doing phenomenally well in Saudi and in UAE. But we do also see the trend of investing over a longer period of time to be in Sub-Saharan or in North Africa.
Yeah. And as I speak to investors across the region, what I've been hearing is, compared to, let's say, a UAE founder or a Saudi founder, Egyptian founders and Egyptian startups are likely to have the grit. They're also on the continent. I mean, geographically, they're already on the continent. There's just a few additional sort of almost intangible things that are hard to qualify, but these are strengths that Egyptian founders and startups seem to have that, sort of exclude GCC startups. And not to say that, tomorrow a Dubai-based startup could, launch a Pan-African, startup and business model, but it's less likely than an Egyptian founder, startup, business model. Also, again, looking at the demographics, looking at the big problems. If we're really looking at the big problems that Egyptian founders are looking to solve, a lot of them in fintech, reaching the unbanked. Many of these sort of things that, let's face it, the GCC founders aren't addressing.
I mean, there is the nature of problems being solved, and therefore the solutions that are being built to solve these problems. That's one area. But there's also, let's say, the difficulty of the operating environment. So Egyptian founders are very resilient because their environment is difficult.
Yeah,
you really have to roll with the punches. You don't know where you're going to get the next hit. Is it devaluation? Is it regulation? Is it something else? But founders who are able to succeed in this challenging environment can operate in, let's say, similarly challenging operating environments in other markets, which many of the African markets tend to be similar to that, more similar to that. So I think Egyptian founders, because of that background, are really well positioned to succeed
Yeah.
these other challenging markets.
I think so. And we hear this a little bit about Jordanian founders and the Levant as well. Like if you're coming out of a scrappy, tough market, then you can do well in scrappy, tough markets. And you're probably tolerant to higher risks and all of that.
And you are not as easily phased.
Right.
Because, it's easy to give up, honestly, like, with all these, like...
Basically, you're calling all of us Dubaiite softies, right? I'm just joking. Okay, and let's, just to wrap up in terms of what Algebra Ventures focuses on. So, yeah, notice that 85% of your portfolio companies now are Egyptian. 80%? Okay, 80%. So 20% for outside. What's the criteria for investing in a non-Egyptian company?
So typically, we will follow another investors if we're investing outside of Egypt.
Okay.
We have relationships with investors who are similar to Algebra in Egypt in some of the other markets that we're interested in. And we have a mutual relationship with these investors, and we will want to follow them in their core markets and reciprocate in Egypt.
Okay. So there's no strategic requirement of, this startup is looking to expand into Egypt, for example.
It makes it more interesting for us. There is no hard requirement that has to happen. If we see that there is potential for it to happen further down the line, then it makes more sense for us and for the company, because if we've had, for example, several conversations with companies that have an established presence in, let's say, Kenya, and a clear path to why they need to be, a clear reason for why they need to be in Egypt. So, for example, Pan-African contracts that they need to satisfy out of Egypt, and they need to have a presence there, or a very clear market opportunity in Egypt, but, that is not being addressed at the moment, and things like that. So in these instances, we can help a lot with recruitment, with connections, etc., for them to enter Egypt. So it just makes for a more compelling case for both of us. But that's not to say that it's a hard requirement. If it's an area where we have experience, for example, that's something else that could be interesting for us.
Okay. And then sector specifically, are you sector agnostic? We
are sector agnostic. We tend to have themes that we like. So I mentioned, for example, long tail, bottom of the pyramid for both consumers and SMEs is an area that we like and that we have good experience in.
I think you have a lot of fintechs and e-commerce in your portfolio.
We do.
But that's also the Egyptian startup ecosystem profile.
Correct.
What else?
For example, we have an interest in agri. So we made one agri investment in Egypt, and then we made we made a second one in Morocco, and we have a pipeline. So that's one area that we believe has pretty good potential. We typically don't think in terms of sector. Maybe agri is an exception because it's so incredibly underserved, and it's such a large part of the economy and such a large employer on the one hand, and it's so highly underserved on the other hand. So it just...
And particularly with Africa, it just seems to be,
absolutely
ground zero for
and
opportunity.
You've seen a lot of success stories come out of India and Latin America that make a lot of sense. So we believe that agri is an interesting industry, but we tend to think more about the characteristics of the company rather than which industry it operates in.
Okay. And vast majority, if I look at, what you've invested in, it does seem to be very much early stage, so pre-seed, seed, Series A. But so there's a couple of later stage. So.
Yeah, we are a multi-stage investor. So actually, last month, within 1 week, we had 2 investment committees, one for $400,000 and the other one for $5 million. So both first checks.
Okay. So
we can come in very early. In that case, it's a pre-product company. Or we can come into a company that's established. So I think when we started out, we wanted to focus on Series A and later. And then we realized that we are in Egypt. We meet these entrepreneurs really early on. There's an opportunity for us to work with them. Of course, also to get allocation early on, but to also, help shape the opportunity. So we saw ourselves moving gradually, increasingly so towards the earlier stage. So for Fund 2, we just set it up in a way that we can do anything from pre-seed, first check, anything from pre-seed to Series B.
Okay. And your average check size is about 500,000 for the earliest stage, and then, or what do you say?
Honestly, it's very specific to the opportunity. So we can make a small investment of a few 100,000, or we can make an investment of a few million. We're seeing companies right now that have raised capital in the past and require more capital. They're coming back to the market with reasonable valuations, which are a bit later stage than what we had planned when we started. So we're interested, of course, to support these companies, but also seeing very early stage founders this is a great time to build a business. It's a great time to build. If you have the capital, and if you see the opportunity and you have the team and the capital, it is a great time to do it, because it's similar to Fowry, Visita, etc. back in 2011. In that there isn't a lot of competition right now. So it's a great time to build a business.
I'm going to double click on this. Let's talk about where Egypt's at. I'm going to give you a few data points, or it's not you because you already know all of these, but I'm going to give the audience a few data points just so that they get a feeling for what's been going on over the last 5 years, 5-6 years. And then, you tell me why, color in the rest of it, and why it is such a great time to invest, because it can appear on the surface a bit counterintuitive, and there are elements that I agree with you that, if you do have the capital, and then the question is there the capital? So let's get to this. So from 2017 to 2022, actually Egypt had unprecedented growth, doubled its economy in these 5 years. In the same period, unemployment went down from 12% to 7%, which is huge for a country as big as Egypt, which, official figures say is 111 million in 2022, but maybe it could be up to 120 million people. Internet penetration also went from 41% to 79% in this time. So huge development in this period. 76% of Egyptians are under the age of 40, and 95% of Egyptian adults own a smartphone. So we're getting to some juicy places for tech investors. And in 2022, when the rest of MENA and the world was suffering, really starting to feel the crunch of the VC winter, Egypt somehow seemed a little bit immune in terms of funding received, recording a record year, fundraising 810 million by Egyptian startups in that year. And then 2023, the music stops. And basically, VC winter definitely creeps in. Investors start sitting on their, powder. And Egypt records only 65 funding deals in 2023, when on average it's around the 200 mark per year. And even more alarming is that last year there was $500 million of fundraising deployed in Egypt, of which 400 million went to MNT Halan.
Portfolio company.
Congratulations. And Egypt's second or first, official unicorn. And so if you think about that, last year there was only 100 million deployed across 64, startups, or 64 deals, which isn't great. And so it's very clear recession has hit Egypt, and there's two things happening simultaneously. The currency devaluation, which we remarked on earlier, where it's halved. The Egyptian pound is worth half of what it was worth 18 months prior. And then there's runaway of inflation. And we can talk about how the war, Russia-Ukraine war, has dramatically impacted that. I'm not sure how much the current Israel-Gaza war has affected that as well, and other elements. But the message is, if you are a startup founder that had raised, especially if you had raised capital prior to all of this, you're really suffering. Every dollar that's coming in now is worth half of what it was before. If you had a valuation before, that's already suddenly halved as well. And on top of that, there were some measures put in place by the Egyptian government that if restricting basically payments to go outside of the country. So, Google Workspace, basic
absolutely.
things like that were really quite difficult. So it's a tough time to be a startup founder. And you're saying it's also a great time to build a business. So a brand new business, I think is what you're saying. And also potentially you're saying it's a great time to be an investor right now looking for these amazing companies that have, valuations that are significantly lower than they should be.
100%. 100%.
Say more. Sell it to me.
So there's a storm, right? There's all kinds of turbulence. All the things that you described and more. I was talking to a founder who said, I think the only thing I haven't experienced is an alien invasion at this point. It's.
I'm sure that's on the cards, right?
It's painful. It's very painful. However, look at the outcome out of all of that. I mean, we can take every one of these things and try to think about or talk about how resilient Egyptian entrepreneurs have dealt with them, but look at the final outcome. There are companies, even in this difficult environment, both companies that have been around for 5-6 years. So if I think about it from the Algebra perspective, there are companies from our first fund that we invested in 4 or 5 years ago, and other companies that from Fund 2 that we invested in a few months ago, that have both been able to weather the storm. And I think that's part of why Egyptian entrepreneurs are so remarkable, because all this crazy, insane things that sound so scary are things that at the end of the day, they've been able to manage and they've been able to survive. And in my opinion, now that things have turned to a more positive outlook, now is really the time to reap the reward for that. Because, if you had to take a significant down round, if you had to cut your valuation in order to raise $5 to $10 million, which several of our portfolio companies did in the past 2 years, and as painful as it was for us as an earlier investor who's not participating as well in new funding rounds from a Fund 1 perspective, we really encourage companies to do that. As painful as that process is, if you're able to survive and even grow a little bit, then you emerge a winner at the end because everybody else falls. So that's what we've seen in these cycles. I mean, it's happened before. It's happened in 2016, 2017. It's happened in 2011, and before that in 2005. So there's a cycle at, let's say, of every 5 to 7 years where this happens. It's very painful when it hits, but it recovers over time. The statistics you told me in the first few years, that was right after the 2016 hit. So if you take a longer term view of this, yes, there is a hit every now and then, every few years, and nobody likes that, but it doesn't kill the story. The fundamental point is it doesn't kill the story. Even if we touch on currency, you take a 50% hit on currency in 1 year. If you're growing 2 to 3 times per year over 5 to 7 years, nobody wants to lose 50%, but still, it doesn't kill your story. Still, the fundamentals are there. And I think that's what's interesting to me about Egypt, and what's honestly impressive about Egyptian founders is that there is this resilience. The operating environment is difficult, but there is a resilience. And if you tough it out for long enough, then you reap the rewards, much like Fowry and Highland and many other companies have done. So that's the reason why we believe being an investor in the past 2 years and today is we believe there's a big opportunity there.
And I'm curious, so your investments now, are they mostly to new startups, or are you also seeing big opportunities?
It's both. It's both. It's either, I mentioned the 400,000 was a new pre-product investment, and then the 5 million is a company that's been around for several years. Okay. So we're seeing both. There isn't an abundance there's very little capital in the market, as you mentioned. These things are scary, right? And it's scary to us. And not to say that we're sitting back and very comfortably saying, oh, no, it's nothing. It's scary, of course. Yeah. But I think we've seen enough in previous cycles that it doesn't scare us as much as it does others. And that's why we made 10 investments in the past, from the new fund. We made 10 investments in the past 2 years, and we're making 2 more in the next month. We really believe in that.
And you're bullish for 2024. You're going to continue at this pace.
We will continue at this pace.
Okay.
And not to say that we have a crystal ball that we know what will happen in the future, but I think the fundamentals of Egypt are solid. There will be turbulence, but there is so much opportunity, so many things that have not been done, exceptional talent, both on the technical side and on the commercial side. I love the combination of resilience on the one hand and resourcefulness on the other that I see in Egyptian founders time and time again. So I'm optimistic. Okay.
Tell me a little bit more about on the ground today. So, I think there was a forecast that maybe inflationary rates would sit somewhere around 30% this year, and I think it's at 33% now. At a high last year was like 41%, which is like I don't know how that felt, but we're still sitting at 33% as of last month. And if I look at the currency devaluation, the one that happened 5 years ago, it's not like it ever recovered.
It doesn't, but I think if you're a US dollar based investor like we are, and like the vast majority of investors in the market are, everything gets priced in dollars.
Yeah.
You take a really big hit in a few months or a year. For example, let's go back to 2016, 17. In November 2016, the Egyptian pound was cut in half in value. But prices kept increasing. So you had the organic growth or the normal growth of companies, but you also had increases in price, and the currency, the exchange rate stayed stable. So you saw in dollar terms some very significant growth, because on the back of the inflation, you're still getting growth in both, in top line and in bottom line. And you're capturing that growth. So it's very difficult to analyze these things if you're looking at them with a span of 1 year. You really have to take a much longer view of things, and then it starts to make more sense.
Okay. And because you do raise your funds in US dollars, there is always this currency risk that's there in Egypt. Has that made you, more desirous of, for example, I think you said 20% of your current fund was reserved for rest of Africa. Does the current currency challenges make you want to invest in more of rest of Africa than in Egyptian startups?
I mean, of course, the currency issues are
real.
They're huge. I mean, I'm not trying to make light of that at all. I mean, they're huge. And at the level of the fund, we're investing outside of Egypt, not just to hedge against the currency risk, because strategically we believe this is our future is there. But also the portfolio companies that we invest in are either looking at export opportunities or expansion opportunities outside of Egypt, or in some instances, for core tech companies, for example, establishing presence outside of the region. So we're seeing a lot of that happening. I personally believe that if you build value and that value is sustainable, eventually you will find the exit for it. It will take some time. It becomes an issue of timing, and you need to have the firepower to keep the company going until the time is right. But because of how sharp these hits are, and because they come you get hit in a certain year and then things stay stable, and then you get hit in another again and then they stay. So timing becomes important. If you're trying to sell a company in 2023 in Egypt, it's the worst time.
Yeah.
If you're doing it in 2021, it was a great time.
Right. And are you also seeing on the flip side of that, though, that there are major buying opportunities, even though there's not a lot of capital to go around? Are you seeing more M&A acquisitions and consolidations happening in Egypt, or not yet?
Not as many. I think smart founders are trying to find a way to weather the storm. It's a bad time to sell. So there have been some exits, let's say, out of necessity. But the companies that have significant value are waiting for the environment to be, for that hit to calm down a little bit, and then look at potentially exit opportunities.
Okay.
And that's the advice that we're giving our companies.
Yeah. And I want to double click on more advice. So if there's a first-time founder who's looking to fundraise in this climate, they think they have a great idea. What's your advice to them now? That would be different from, let's say, your advice a couple of years ago. I
think just be honest. I see a lot of founders trying to paint a rosy story, and that's general advice that I give to all entrepreneurs. This is a partnership that will last for many years.
Cut the BS.
Well, cut the BS for sure, but also realize it's not just about this round.
Yeah.
An investor who comes in, now you will want that investor to come in again in 2 years or whenever the next round happens, and maybe potentially after that again, and so on. So it's really a partnership. It's not a sales pitch. Of course, we all want to explain what we're doing and we're excited about what we do, etc. But I see even sometimes at the portfolio level, founders who think of investors as someone that they have to constantly sell to and sell a rosy story. And I think that creates a disconnect between founders and investors. And over time, it erodes trust, because if you feel like you're getting pitched all the time, then the credibility starts to. So thankfully, we don't have these companies in our portfolio, but I've seen that happen in many instances, and I think it's just dysfunctional.
No, I think that's a great reminder, because it is. I do get that sense from startups. And even from investors sometimes. They say, tell me why, and so it is a pitch, and there is a sales element to it, I think, in the fundraising process, but also so important that it's actually more than anything a relationship building exercise.
Absolutely. And by all means, the first meeting is all pitch. 100% makes a lot of sense. Yeah. Let's not make the 10th meeting also all pitch.
Right.
Because then it becomes, then it's no longer a partnership.
Yeah.
And out of experience, the journeys that we've gone through with our entrepreneurs, which always includes ups and downs, have been really the ones where we were able to be a thought partner to the founders, support with capital and support with in other ways, and I think that's when we found that the outcome has been the most positive.
Okay, and let's double click on what makes a perfect pitch to you, very subjectively. These days, if you think back to some of your favorite pitches, what advice do you have that makes a perfect pitch to future founders?
I mean, the answer to any question is it depends, right?
Always.
I think let's take a couple of ways to look at this. First, there's a stage aspect to it. So for very early stage, it's more about the passion of the team. Do they have the right skills? So it's a lot more really about the team and maybe the market. But the product is maybe an idea, and then things will evolve. If it's a later stage opportunity, then it's much more about looking at the numbers and the traction and so on. But I think what's common between both is, in my mind, it's less about actually the details of the conversation, and honestly, the level of talent that we see in Egypt now, the strong founders know their stuff. Like, they'll understand unit economics, they'll segment the market, they'll talk about, what's missing in the team and so on. So we see that. But I think, in my mind, a pitch is actually an opportunity for a conversation. Because as investors, we know that whatever we're being pitched today might make a ton of sense, but it will probably change. And depending on how early stage it is, it will change very drastically or less drastically. So I think it opens up the opportunity for us to have a conversation with the founders and see if there's a meeting of the minds. See if these are partners that we can really work with. Can we problem solve together? Do we have, do we think of things in a similar way, etc. So rather than, is the PowerPoint presentation very slick and so on, I think over time I've learned not to be as impressed by that. But it's more about, an engagement, an opportunity to engage between investors and founders and test out, if this can be a long-term relationship.
And if you think back to your most successful founders and sort of those relationships between founder and investor, what are the qualities that they have that you go, oh, if they have that when they walk in the door, I'm always intrigued?
It's passion and skill. It's a combination of passion and skill. I also really like founders who demonstrate resilience and resourcefulness. I think there's a combination. On the one hand, passion and skill, and the skill, of course, within the founding team can be complementary. So you can have one founder who's stronger on the technology side, for example, another founder who's stronger on the customer side, etc. But given the difficulty of operating in Egypt and given how big the end reward is, you want that grit. So that's partly passion, but also partly sometimes experience.
And these days, do you really need them to have that sort of multi-market vision from the onset?
It's contextual. I think for some opportunities, it makes a lot of sense to start that early. For others, it makes no sense at all. If you don't have product market fit in your core market, it's not the time to think about expansion into another market.
Sure.
And I think that's one of the problems we see, particularly in the past year, of founders seeing all the things you talked about in Egypt and saying, well, I'll very quickly go to another market. But then, that doesn't always make a lot of sense.
Okay. And Tarek, very subjectively, what's one of your biggest pet peeves when it comes to founders just constantly approaching you for funding or in the pitch itself? You can think long and hard because someone's going to watch this and then not do this thing.
There's a few. I think in many instances, I meet founders who take a spray and pray approach to fundraising. So they'll know nothing about the investor that they're talking to. And they'll just go around and meet them either at events or at pitches or in different contexts. But it's, I think at some point a founder told me that I talked to 100 investors. It's a waste of time. It doesn't work.
It's quite sad, actually, because sitting on this side of the table, this is probably the pet peeve that I hear the most, that founders just don't do their homework, have no idea who they're talking to, and they're just giving them this, sales pitch that is almost completely irrelevant to the investor in front of them. And what a bad taste it must leave in your mouth, where you're like, I'm not talking to this guy ever again, even if he has a great idea.
And what I've seen on the flip side of that are people who really do their homework is, they have a relatively small targeted list of investors who have relevant experience. They look at their portfolios. They'll have a bit of a sense for, what they look for. And is that investor a good partner for that founder or not? Because honestly, that's even more important than how big of a check can they give you. Will they be the right partner? Will they stand by you when times get tough? Will they prioritize you and give you the right support when you need it?
And let me ask you this, because we get this question a lot from founders of, hey, I found a number of venture capitalists, even on our Lucidity Insights database.
Yes.
that are investing in digital payments within fintech, for example. And the question is, would they also fund me if I've built a product that's very, very similar to a company that already exists in their portfolio?
At Algebra, we don't fund companies that compete directly as a core business. So there are always adjacencies.
Yeah.
And we can live with some level of overlap, but we won't fund two companies that are trying to do exactly the same thing, because if we have a relationship with a potential partner, then who do you give it to? If we find talent, who do it just
makes things more complicated.
It makes things more complicated, and it creates friction also in the relationship between us as investor and the founder. So we don't do that. However, I meet a lot of companies, for example, that are trying to do something similar to what Fawri did, maybe even outside of Egypt. So there are a lot of lessons learned from these experiences. But if I'm a founder, I wouldn't want to go to get funding from an investor who has a portfolio company that does exactly what I think that doesn't make sense.
I also received once a response. I was just chatting to an investor on the phone, and I kind of gave the same question. And they said, well, I would still take my chances to reach out, because sometimes without, my research might not be able to show that this startup is actually really struggling. And the investor might still believe in the business model, but for whatever reason, this startup is the writing's on the wall. They might have to shut it down at some point, and the investor might be interested in funding another team that's going to actually be successful at it. Your take on that?
My personal view is I'd wait until it's no longer the writing on the wall, until it's a done deal. So that things are clear, because the writing can be on the wall, and then things change in positive and negative directions all the time. But it really depends on the investor and their strategy. For Algebra, we're very clear on that. Out of the same fund, we don't invest in the companies that directly compete whose core businesses are competing.
Yeah. And it seems to be quite, I think that is the case across most
And
funds.
honestly, also, it means that we have a deeper relationship with our founders, because it means that, we are backing you, and which has opportunity cost for us.
Yeah.
So it's not just the investment that we're making for that company, it's also that, we're no longer looking at companies that do exactly the same thing.
Okay, fair enough. Gosh, Tarek, I feel like this time just flew by.
I'm enjoying it.
We've got, we'll have to get you back on the podcast at some point. But if you can leave our audience with, the best piece of advice that you ever got, that you could wish on them, get them to take it with them, particularly as it applies to, well, actually, I'm going to leave it broad. Best piece of advice you've ever gotten, whether it's career, entrepreneurship, investments?
For entrepreneurship, I think it's make sure you're ready for the ride. It's not easy. I think we tend to hear very romanticized stories about very positive outcomes. That's not the experience of everyone, and that's not the entire experience even of these very successful companies. So it's not all about the success of being a unicorn. It's a journey that always has ups and downs. It's a roller coaster ride. I mean, I even experienced it when I started when I saw the .com boom and bust back when I started my career. It's not for everyone, and as enjoyable as the highs can be, the lows can be pretty painful. So just make sure you're ready for that.
And when you say make sure you're ready for that, one is awareness, but is there any way that anyone can prepare for that?
There are many things you can do. I think one big part of it is the partners you bring on board. So you're not on that journey alone, and that's, of course, your co-founders, having complementary capabilities, not just from a skill perspective, but sometimes from a personality perspective, can be very powerful. And, surround yourself with good people. Amazing. Who are excited about what you're doing.
Amazing. Tarek, thank you so much for joining us
Pleasure.
today.
Pleasure. Thank you for having me.
Hey there. Thanks for joining this conversation. If you enjoyed that episode and you want to start researching potential investors for your startup's fundraising strategy, go to lucidityinsights.com and sign up now to the startup registration package by clicking the plans button on the top right corner. We look forward to having you join our future conversations and checking out our additional content. Until next time, stay hungry and stay humble.